when people make purchase decisions of where they're going to put their family on a need-based sort of decision-making process, they're not thinking 30, 40 years ahead. They're thinking 5, 10 years. And in a 5, 10-year horizon, global warming isn't a consideration. It's where they're going to live, where they're going to send their kids to school, and how are they going to live out the pandemic, however long they think that will be.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odum and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odum, along with Steven Silverman. Steven, special treat today.
Well, today is special, and actually it's something for the benefit of all of us, because this guest was referred to by another listener of our podcast, and it helps us so much when people refer guests to us, because we all get to learn from them. So thank you so much. It's going to be an interesting topic today.
South Florida.
Yeah.
As a matter of fact, I was just going to read an email that I got from Steve, one of our listeners. He's down in Fort Lauderdale, and he's always cribbing for trying to get more South Florida guests. And lo and behold, here is a South Florida, Miami, not Fort Lauderdale. We're going to talk about Miami, not necessarily Fort Lauderdale. But Steve, here's your chance. Steve was good enough to leave us a review a couple of years ago, and occasionally he will send us emails that he wants this guest or that guest. And he's been very helpful in trying to help line folks up. And so, that's where we always appreciate the connections that our listeners make with some of our guests. And this is certainly no exception. It wasn't Steve who referred this person to us. And I guess we should have asked Ana who did.
Yeah, she just mentioned that somebody did. But guys, it helps us so much get quality guests if you refer, and also give us likes, because the first place the guest goes to look and see what kind of reviews or whatever we have, it just helps keep the quality up.
Well, the introductions are the best, because usually at that point, the listener has already sold the potential guest on our show, and there's not a lot of convincing that we have to do to have them come on. We have to make a lot of solicitations to try to get folks. And our area of expertise and our circle of influence is in the I-4 corridor. So folks from Miami and from Fort Lauderdale and Naples don't necessarily know us, and usually the introduction is really the way that we end up getting our guests. But the other way you can help us, if you don't know folks in South Florida or Naples or Jacksonville, for that matter. We haven't had a guest from Jacksonville. We have to have someone from Jacksonville on the show again here in the near term, Stephen. But you can help us a lot by just leaving us a review on iTunes, the Apple iTunes podcast store. Leave us a review, because that's usually the first place people go to. They'll say, who listens to this program? How many listens do you have? Do they care? And so the folks that have already done so, we're very much appreciative of you leaving reviews. But if you haven't done so, would really just take a minute and just do that, because it doesn't just help us. It helps you guys too, because it does build credibility for the show and gives people confidence that they're not wasting their time when they come on and talk to us and talk to you. So enough of that, Stephen. But we do have a great guest, Miami today, talking Miami. And is there any housekeeping items before we roll into our guest?
I want to roll into our guest, so let's do it. Today we have with us Ana Bozovic. Ana is the founder and owner of Analytics Miami. For the past 3 years, she has been publishing long-term trend analysis on the Miami real estate market. The Analytic Miami reports are outcome agnostic. They are not paid for by any brokerage, and their intent is to bring truth to the market. Her reports are entirely data-driven and often are contrary to the mainstream narrative, especially in regards to the residential markets. In her reports, Ana charts the whole market cycle and emphasizes supply and demand fundamentals across market segments. Markets are cyclical, and the reports chart a full 10-year cycle. Having no-spin data as a guide is especially important in times of uncertainty. Ana studied math and physics at Columbia University. The Analytic Miami reports draw upon her abilities to see past the noise and recognize patterns in data. Ana, welcome to the Invest Florida show.
Thank you very much for having me. It's a pleasure. Thank you.
Ana, we really appreciate you taking the time and investing with us today. Why don't you start with a 30,000-foot overview of how you arrived in Miami and how you got started on your business?
How I arrived in Miami. So I've kind of lived all over the place. I was born in Belgrade, in what was then Yugoslavia. My family moved to New York City when I was 3, which is where I grew up and stayed for school. And I lived in Switzerland for a few years. And then I came here in Miami Beach about 7-8 years ago. And it was really as a 6-month trial. It was time to come back to the States. I knew some people here, so let's give Miami a try. And 8 years later, still here. No more winters for me. So this is where I'm staying. And when I made the decision to sort of stay here, part of that decision involved learning about the city. And it may have been by virtue of contrast, like in Zurich where I lived, nothing has changed for hundreds of years. And in Miami, the whole city, the skyline essentially didn't exist 20, 30 years ago. It's all brand new. And I was sort of enamored by how quickly Miami had grown and how much growth there still is to come. I feel like we're still early days here in Miami. So it was part of a discovery process of learning about the city. And the story of Miami right now is very much tied with real estate because the city is still being built. So that was how I started meeting people in the industry, getting involved in the market. And I ended up launching Analytics Miami about 3 years ago. I initially started publishing long-term trend analysis in the residential markets. I felt there was a sort of need in the market for that. There were reports being put at the time that I didn't quite agree with. And I felt that for most people, your average person, a residential purchase is the largest purchase they'll ever make. And that regular people deserve to know the truth about the market and market directionality. And so I started publishing those reports about 3 years ago in Analytics Miami.
So what kind of reports are they that you're referring to that where the data is incorrect? Because we get reports from, the real estate boards. We get reports from brokerages, and they all have big economic departments and double-barreled names, and so you have to believe them, right?
They do. Right, exactly. I wouldn't even use the word incorrect. It's more so about presenting data out of context. When you, for instance, transaction volume is a very important metric. Transactions are the building blocks of an economy. That's the true measure of demand. And it's a very, very simple thing to measure in a residential market. It's just how many transactions are happening. And there was nothing at the time. I mean, the condo market here has been in transaction volume decline since 2013. And around 2015, 16, when I started thinking about this stuff, I said, wow, why is this not being communicated through any of the major brokerages' reports? And it wasn't for a reason, because they're selling their book. They don't want you to think that the market is in decline when it very clearly was. And so I think that it's like if a Wall Street firm was trying to sell you a stock and they're publishing the research in the same room.
It's called buy-side analyst. It's exactly the same thing. It's exactly the same thing. But I never really thought about it because we produce our own and we don't really consume data of the other Wall Street commercial real estate firms. So it's interesting. I never really paid a lot of attention to the residential side, and I trust that what you're saying, that you saw a hole in the market there and decided to fill it. So why don't you talk a little bit about what's happening in the condo? Because that's intriguing to me from a outsider's perspective. Now look at Miami. I just hear about how things are going gangbusters and all those condos now have filled up. And you're telling me since 2013, it's been in steady decline. Of course, we'll talk a little bit about COVID and what happens there. But so what's going on there?
Well, the 2013 was the transaction volume high for the condo market. And Miami Beach, which is a good proxy for the luxury market because we have a higher percentage here by virtue of being a barrier island, and most new construction here is expensive. Actually, all new construction here is expensive. Overall, Miami Beach data is a good proxy for the luxury market. So 2019 had almost 40% fewer condo transactions than 2013 in Miami Beach. And the interesting point there to point out, to emphasize, is that loss in volume was almost 100% due to the loss of cash buyers. So then the number of deals closing that involved financing stayed pretty flat, but that decline is like 98% attributed to the loss of cash buyers. And that was where they all came from, Latin Americans all over the place. They were coming here buying in cash, and that cash went away, and along with it went the transaction volume. And the same pattern held for newer, expensive projects built on the mainland in Miami along the bay, Edgewater, downtown, Brickell. There were just colossal buildups of inventory. So, I made a report, actually. It was called the supply and demand report. And I had simple charts by neighborhood. It showed what's it called, demand as measured by transaction volume. And you saw a steady line down. And then you had supply as measured by inventory, units for sale. And that was a steady line up. So there was just a colossal disconnect leading into COVID.
I want to make sure I understand that. What changed? What do you think changed? Because I'm not sure you have data really to say definitively it's X or Y, but what are your suspicions as to what changed from 2013 till today?
Good question. I think it's a combination of factors. Some people like to talk about the GTOs, the geographic targeting orders for all cash purchases, right? But this is where title companies had to disclose the identity of people purchasing all cash, and they kept changing the min threshold for that. But that didn't go into effect until 2016. So while that would not have helped, that was not in effect when this decline started in 2013. Exchange rates, I don't have a clear answer for that. It's a lot of factors. It could have been also that there was an initial volume buildup leading up to 2013, because what happened before that, right? A few years before that, we had a major financial crisis. Sure. And prices dropped a lot. And so it could have been that volume leading up to the peak of 2013 was volume of people buying cheaper stuff. And then once prices were driven up, which they were, then just simple pricing, it got too expensive, and those same people stopped buying.
Yeah, because those were the years of foreclosures and all the other things going on.
Yeah, I mean, we were told that it was going to be 2020 before the Miami market would stabilize. And that was 2009 that we were reading reports and saying, well, it's going to be 2020. Well, of course, we all know that it stabilized way before then. But now you're giving us data that is, we're not experts on the South Florida market. So it's interesting to us. If someone had told me that yesterday and just said, hey, condo sales are down in Miami, because of COVID? No. They've been going down since 2013. I would have placed $1,000 on the table and said, I bet you that's not true. So it's
exactly. And no one seemed to know that here. When I started publishing that, when I made a big supply and demand report that got passed around, it was like 2017, 16, something like that. And people were shocked. People who build buildings were shocked. They were like, we didn't know this. And I said, well, you should know this. Transaction volume is key.
And they were still building, right? They were still building new luxury development.
Yes. Yes, absolutely. They still were. I had conversations with people, in fact, building such buildings that were unaware of this transaction volume decline.
Oh my gosh, that's a wrong time to be learning data.
Exactly.
And at the same time, over that same period, what was happening in the non-luxury market?
So, right, at the same time, we had this sort of duality going on here. We had an oversupply of luxury, and at the same time, the region has an undersupply of what we'll call price attainable housing. There's a metric that was published called defining someone as a cost burdened or aggrieved renter if they're paying more than 40% gross of their salary on rent. And this region, the Miami area, I believe had the highest percentage in the nation of people who were considered cost-burdened renters. So there is an undersupply of price-attainable housing. And the Miami area always ranks very poorly on affordable housing.
Yeah, we've talked about that in the past, too. It was probably last year we had data that came out. They talked about the 10 least relative affordable housing markets in the country. And Florida had like 4 of the 10.
Yep.
But based on income, household income, how much you're paying for your home. It's shocking.
Exactly.
Rent and mortgage too.
So the transaction volume in luxury decreased over that period. What was the transaction volume doing in the more affordable housing?
Yeah, I would segment these things out in little increments, like 250 to 500, 500 to a million. So as you got more affordable housing, it was relatively flat depending on the submarket. So, for instance, the city of Miami has a smaller percentage of its housing stock that's considered luxury. And so if you just track the city of Miami, you get more of a proxy for the general market than Miami Beach. And it was down a little bit, but not so bad. It was like 8%. Like it was down a little bit over time, but not bad. Not bad. But but by the same token, though, in the city of Miami, in the mainland, the luxury markets were actually doing worse than Miami Beach. There were some submarkets with 100 months of inventory at the end of last year, which is crazy. A healthy market is like 10.
So that's like Coconut Grove, Coral Gables. What else would you consider the luxury submarkets?
Actually, good point bringing those up, because Coconut Grove and Coral Gables would actually be examples of relatively healthy luxury markets. The reason being that, well, one, they don't have a huge, there's not a lot of condo developments, especially in Coral Gables. That's mostly a single family home market. And then here's also the key distinction. Those two markets mostly cater to in-place demand. When we talk about the condo glut, that's not in those areas, Miami Beach or Miami. Those condos were trying to target destination money. It was destination money, not the local working person who was purchasing pre-construction luxury condos. And when you chase destination money, you can hit the bonanza, but it's also very fickle because that's not in-place demand. So Coral Gables, that's in-place demand. People buy houses there because there are a number of good schools there. Families live there. They put down roots there. And so Coral Gables and Coconut Grove are relatively healthy, stable markets. Coconut Grove now has some new condo projects, but they're doing okay. It's not like they're building tons of towers. And again, they're targeting that end user. That's the big distinction. All those areas that were in trouble got in trouble targeting that destination buyer who was buying in cash, and that buyer had been going away.
So what markets are we talking about then? Brickell and Aventura?
Yeah, Brickell, downtown Miami, Brickell, Edgewater, Miami Beach. Just the higher up, Sunny Isles. Sunny Isles was one of the worst submarkets. I contributed to a few articles on that topic about some projects that were launching, and they asked me what the state of the 3 million plus market was, and it was something like 150 months of inventory. It was colossally bad.
You know, it's interesting also because I can't believe it's happening in a vacuum, but I'd be interested in, maybe you can enlighten me a little bit on this, because there is some single family home on Miami Beach, particularly around the golf course and whatnot.
Yes.
It'd be interesting to me because it's all in a flood zone. And I know that, I used to live in Miami Beach in 1993 to 98, and king tides, for example, the water is regularly into the parking lot of my old condo. And so the sea level rise is one of the issues that is, you have to be living in a cave to not hear of what's going on in Miami being sort of ground zero as it relates to that. So I would think that there's some impact from sea level rise, being in a flood zone. Downtown, also a lot of it's also in flood zone. And it's not just, even for folks that say, well, this is not happening, the flood insurance is telling them something else, because the flood insurance continues just to rise you're constantly getting bumps, and you're constantly adjusting the flood zone areas. We just got new maps from FEMA here in St. Pete and Tampa. So I'd be curious to see the comparison of like those single family homes in the Miami Beach, because then you would really be able to get a clear picture if global warming / sea level rise is having some effect on transactional volumes in the single family home market in Miami Beach and these other areas.
Yeah, I get asked this question a lot. It's actually on the single family home topic. My honest answer is no. I don't think it has. We forget that New York City is under flood zones also, and that I think that New York City has the highest number of miles of properties under old like standards. Sure. Like New York has a lot of flood map issues, and that has not affected the rise of those property values.
Interesting.
Obviously they're hurting now, but before it hasn't. And actually Miami Beach, so that was what we were talking about before, was like all like pre-corona. Now post-corona Q3, Miami Beach single family homes, 3 million plus, actually were up over 90% transaction volume wise this quarter over it.
Well, there's your answer. They don't care. It just doesn't matter. It really is a condo issue.
And that ties into this. It's like most people, when they purchase homes, and again, why is single family doing so great? Because it's like a need-based purchase during a pandemic, and it's being purchased at 3 million plus by people who we can call the investor class, who are benefiting from the stock market and who haven't lost their jobs, right? And so when people make purchase decisions of where they're going to put their family on a need-based sort of decision-making process, they're not thinking 30, 40 years ahead. They're thinking 5, 10 years. And in a 5, 10-year horizon, global warming isn't a consideration. It's where they're going to live, where they're going to send their kids to school, and how are they going to live out the pandemic, however long they think that will be.
So are you saying, just so I understand, that the luxury market up until COVID was in oversupply, and now it's turned the opposite, that it's the luxury market that's performing?
Yeah, I think we're at a very interesting inflection point, right? So we were down again. All markets, us, New York, whatever, everybody was down massively in Q2. So we were down almost 50% transaction volume-wise across the board, as was New York City, as was everybody. Q3 here was very interesting. We saw a rebound across the board, but the rebound, forget rebound, submarkets that exceeded old highs and in many cases reached all-time highs for transaction volume were the million-plus single family home and condo markets, which were the ones that were performing the worst before COVID. It's kind of fascinating. And that's because it's that investor class fleeing, perhaps my theory, it's the investor class fleeing more blighted northern urban environments and seeking out places that they think are safer for a pandemic. So our luxury markets are benefiting hugely. It was just a massive, New York City is still down over 40% transaction volume wise. And we have Miami Beach single family homes past 3 million posting a 90% increase. And then the condo market was doing, Miami-Dade million-plus condos were up 11.4% year over year for the quarter. Broward 36 and Palm Beach 46%. And then single-family home with Miami-Dade past $1 million were up 58%. Broward 77 and Palm Beach 88.
Wow.
Yeah, I can get it with, I understand it with the condo market, people not wanting to share common spaces with their neighbors because the chance of being infected. Even before COVID, I wouldn't jump in an elevator with Steven. And now today with COVID, I would.
He's lucky I let him in.
Well, Anna, if you really saw, I joke, but it's not too far from the truth. I put the boy in the bubble. And Steven's over here. I put him in a plastic sheet wrap so that he doesn't breathe COVID breath all over me. So I get it. Like, I understand why people wouldn't want to, share, common areas. But let's talk a little bit about, we started to talk a little bit more about that need on the class that's suffering the most. Can you talk a little bit more? And these folks, they're struggling anyway. They were struggling before COVID. They're paying whatever the number is, more than 50% of their household income on rent or housing expenses. And so what is the picture looking like for them now post-COVID?
Not great. COVID, it's that K-shaped recovery that I think that we should be talking about versus V-shape. I read a stat that 80% of job losses or something to that effect were felt by people making less than $40,000 a year. And then once you get to over $60,000 a year, which I think is the top third of earners, they've almost recovered job losses. So the economic impact is felt most heavily by people at the bottom. And then in the Miami area, of course, our economy relies so heavily upon tourism and hospitality, which is where most of the job losses were. So I don't know. We have rent forbearance kind of still. I think the state's expired, but there's a federal one. And people are just kicking the can down the road, is my impression, trying to hold on as long as possible and seeing how long it takes for everything to reopen and recover. But the time horizon is so uncertain. It's not a good situation.
Yeah, I know. And I know that you're a person that is not looking at a crystal ball. You're looking at what just happened in the rearview mirror and trying to perhaps use it as a forecasting tool.
Yep.
But it's a question I get every week. Eric, I'm building up cash on the sidelines. There's going to be this rush, and I'm going to have an opportunity to buy. I don't think that's ever going to happen. I don't know how you feel, but first off, what you just mentioned is just basically justifies my position all along, which is that the top third has gathered more wealth. And they've been beneficiaries of PPP. They've been beneficiaries of the stock market. A lot of them were getting out. Look what happened. The politicians were just basically a microcosm of what was going on in the uber wealthy class that were starting to pull their money out of the market anyway in February. And then, of course, they jumped back in March and all made a boatload of money. And they're out buying homes. They're moving out of New York City. They're moving out in Chicago.
Yes.
We see it here in Tampa. And they're buying luxury homes and they're buying investment properties, and they've been doing it. So I'm curious if you can kind of maybe talk a little bit about what you're seeing in Miami and South Florida, and if you subscribe to the same belief that I do, is that there's not going to be this all of a sudden 20% reduction or 10% reduction in asset prices where there's going to be this opportunity for everybody? I'm interested to hear what you have to say.
On the residential front, I agree with you 100%. I think we're in the early days of what I'm calling a dissipation of epicenters. So much of how people lived and worked prior to this epidemic was based on pre-internet structures. Like you had to physically be there, even if you didn't really. It's just you were used to being there. Like New York being a financial hub, all those structures were set in place before the internet. And so Corona in many ways is this accelerator of change, pushing us into the future and dissipating these physical epicenters. And once people make that step and move themselves and their kids and their families and buy a house and put their kids in a new school, they're not going back. There's no light switch that takes us all back to the pre-corona status quo. And I think that as more people start moving to Florida, and look, they already were before. I think in 2019, the state of Florida was the largest net recipient of in-state migration of any other state in the country. So we've just accelerated that. And as people move here more high profile, whatever, hedge funds, financial guys, whatever it is, move down here, and that infrastructure comes here, more people are just going to keep coming. The momentum has just started. So I think that those northern epicenters are going to keep dissipating. People are going to keep moving here. It's not going to stop. I think it's early days. And I think that since the beginning of this, most people have underestimated the time frame and the scope of what's set into motion by these global shutdowns and the pandemic. And we're still early days. So I agree with you. I think that people are just going to keep coming here. And I don't see a crazy collapse here in the residential front. I mean, we're seeing such upticks in transaction volume. Like, how could it be? Transaction volume is key. People are coming.
Yeah, transaction volume in a period when the banks are more conservative. Everybody's concerned about the shoe that's going to drop with COVID, and the transactions are still occurring and they're still increasing. And the stress that is in these, I would call them sort of the suburban markets. And what I mean by that, people still want to, they're not going to just all of a sudden go out and live in the sticks someplace. They want to live close to restaurants, walking areas, entertainment areas. And so what they're doing is moving out of these really dense areas and then into those areas that are bikeable or walkable distance to all those restaurants and entertainment areas. And so we look at when you look at downtown Tampa, you look at downtown St. Pete, the housing markets that are within 2 miles of downtown St. Pete, holy bananas. Just
wow, that makes sense.
Blam. And St. Pete was under so much pressure before anyway, because that's where people want to live on the West Coast. I don't know if you've been to St. Pete recently, but it's a great area.
It's beautiful.
Yeah, but the single family market around there, holy cow.
So I've been thinking about what you said, and it's astounding to me because what I'm getting out of this, that actually the luxury market in South Florida was in big trouble, and actually they got bailed out by the COVID crisis. Isn't
that crazy? Yes, exactly. Exactly.
What's more astounding is they're really sophisticated investors, people who analyze markets, who look at where they're going to be building. And I work with developers putting up multifamily and analyzing, and they're doing the demographics and everything. Then they go out and build. And yet these people were running all those numbers. And yet they were going in the wrong direction. COVID bailed them out.
It's remarkable.
Yeah.
Yes.
And it sounds also like what you're telling me that what's happening in St. Pete too, with that area sort of surrounding it. I would consider like the roads near downtown Miami is similar to what we would consider Old Northeast and St. Pete. And then of course you've also got Coral Gables and Coconut Grove, which are right
very
on sort of
bikeable. They have that little downtown. It's cute.
Exactly. And so you're telling me that those areas they're just on fire.
Those areas were more stable leading into COVID because they were always sort of more end user driven areas. They weren't chasing destination money, and now they're doing extra good.
So I was just curious on another subject. I know that your data and your focus is on residential data. Do you think that some of the commercial data may also not be giving the right perspective? Do you have any thoughts on that? It's not really a fair question because it's a different market. But
no, it is a fair question. I actually think there is better data on the commercial markets in general. And largely, this is why. It's because it's largely catering to a more sophisticated audience, and they have to put out better content. So the residential data was put out by brokerages that are producing it for their agents and for, really for regular people who are buying condos and houses. And these are not people, generally speaking, who are sophisticated about the markets at all. And so you can give them something that wouldn't pass muster to a more sophisticated audience.
And yet it was these same more sophisticated people that kept building pre-corona.
Sort of. See, so the people building, developers are by nature optimists. Like they have to be. A major skyscraper project could take you 10 years, start to finish. And so you have to believe in your vision and be an optimist to get it done. And when a project takes that long, in their defense, how can you even play the cycle when your project duration is that long? Yeah,
it sounds like they got lucky.
Yes, I think so. No, it's astounding. It's astounding, and I really think that. Look, I don't wish Corona upon the world, upon anybody, but I think that within the context of it, that South Florida is benefiting. I think all these people are going to come here, and more are going to come, and it's accelerating all those positive trends that were in place here before. And that investor class, people who work off their intellectual capital, who don't have to show up physically for work, who can choose where they want to live, the more of them come here, the more are going to come. It's just going to build momentum.
Well, it's a mirror of New York. You went to Columbia University, but all the people moving out of the city, they're going to Westchester, and it's the same thing.
Yeah, I was just going to say.
Now, before we got started, Ana, you were talking about that you did some work in hospitality. Do you feel in a position to be able to talk a little bit about that?
Yeah, I think that hospitality is in even down here is in more trouble than the residential market. There are a lot of, and again, especially the smaller operators that again are not benefiting from the Federal Reserve, like when they started buying all the corporate debt. So the smaller shops are not benefiting. It's a question of how long they can hold on to their debt and how long this whole thing takes. I think we're going to see a lot of changing in hands in hospitality assets and probably consolidation to larger players as this, in my estimation, global air travel is going to take a very long time to recover. I think as of, when did I see data from September or August, that global air travel was still down over 95% as measured by miles traveled. And that's pretty colossal. So I think there's going to be a lot of changes of hands in the hospitality space. So I think the recovery is going to take a few years.
And we deal in hospitality too. We, sort of look at what's going on and certainly see our independent operators just suffering. Yeah. They've not closed already. Yep. Darden, on the other hand, killing it.
Yep.
And is that the world that we want going forward, where we basically Olive Gardens and macaroni grills and all of the really chic, creative types that were making things happen in these emerging neighborhoods in Miami and really around the country are going away? I think that's a pretty sad world.
I agree. And actually that just ties into a broader pattern here. Small businesses have been impacted much more severely by government shutdowns than larger enterprises, obviously, and they have not recovered. And when you have, I speak for Miami-Dade. One day they announce a shutdown at this time. One day they're shutting this down. Then they're fighting about this. They're fighting about that. Independent businesses cannot survive shut down on whim. Only large organizations have the bandwidth to do that. So, yeah, I agree with you. And what America has always been about entrepreneurship and small business, and that's what's suffering the most during this.
Mm-hmm. And as we sit here now, there's really not an end in sight. We don't know, nope. I guess when vaccines come and things like that maybe the data will
It's such a political, they're not going to, people are going to take it anyway because it's such a political football. Everybody's afraid that the data is.
And there's no time horizon. Like there's never been a successful COVID vaccine. So is there even going to be one, and when? And I was so offended by this narrative put out that we're going to have a vaccine in a few months. You cannot create a vaccine in a few months. It's never been done. I felt that was just some weird fake press narrative. It's at least a year.
Well, we're in an election year.
Exactly.
Yeah. It's a political football, and it's really unfortunate because our market, real estate, financial services, stock market, whatever any of that kind of falls into financial, relies on being able to get accurate data and being able to have some consistency and clarity about what government is going to do so that we can make appropriate decisions. And when you have this smokescreen that's constantly out there. You don't know who and what to believe. It really has made for a very unstable economy.
Exactly.
And an unstable situation. So it's
a lot of uncertainty, And for people operating on any type of margin, thin margins, running a business, uncertainty like that, it's very, very difficult to operate.
Yeah. And I worry about the small restaurants. I mean, you know, what is that going to look like a year from now in terms of vacancies and you know, it obviously, because we're in commercial real estate, this is a lot of what we do. It's something that, you know, we worry about our clients, we worry about their families, we worry about their businesses, but also there's, you know, we're sort of managing properties that have a lot of hospitality inside of them. And what is that going to look like a year from now? So it's unsettling times.
Absolutely. It's just radical uncertainty. Nobody knows. Well, nobody knows. And then the trickle-out effects of all of this are just mind-boggling. It affects everything.
Well, Anna, I have to tell you, next time I look at some data, I'm going to look at it a little bit differently. But if people want to reach you or find out more information, how can they contact you?
Sure, thanks. So my website is analytics.miami. My email is anna@analytics.miami. They can find me on LinkedIn under my name. And then I post a whole bunch on Instagram under Ana Analytics.
Awesome. And Ana, anything else, any final nuggets before we let you go today?
I just want to say that I'm generally very optimistic on the state of Florida and South Florida. I think that, again, I wouldn't wish Corona on anybody, certainly not on the world. But our region, I think, is going to be like a net beneficiary. I think that we're in the early days of this dissipation of epicenters, and that we're on the receiving end of what I think is going to be a steady flow of human and intellectual capital and wealth that's going to keep coming here. So I'm optimistic on the region, and sort of bigger perspective than that, I think that we're like in a 5-10 year worldwide shift. But I think it'll be okay. Like, I'm an internal optimist on the upward trajectory of humanity. It's just that this shuffling period of the next few years will be a little challenging, but we're all lucky to be in Florida.
What you're saying is Florida's doing what it's always done. It just really waits for people to come, and then that takes care of a lot of sins.
Exactly. 100%. It's a great place to be. We have all sorts of infrastructure being put here now. Financial infrastructure, we have art, culture, all those things that were not so much in place in the last financial crisis. So I think this is kind of like the beginning of a new renaissance here. People are going to keep coming. Look, I grew up in New York City, and I see the pictures from the street, and the optics they're just not good. I mean, I lived for a time in the Upper West Side. One of my friends added me to an Upper West Side neighborhood group on Facebook, and that's where de Blasio put in like 15,000 mentally unwell homeless people in hotels there. And it's your quality of life is deteriorated. It's not safe to walk on the street. The pictures are horrific. Same thing in Chicago, same thing in parts of San Francisco. And that's not fixing itself with the flip of a switch. And as more people leave, and then they have friends who've left, they're going to keep leaving. So, I mean, of course, New York City is not over. New York City is a wonderful, large city. But, we forget the 1970s happened in New York City. So there could be a period of a few years where it's not the best place to be. And a certain percentage of people change their habits, shift their way of life. And I think that we're going to be on the receiving end of that.
Awesome. Ana, very much appreciated. Great information. It's hard for us to find folks down in Miami to give us good recaps. And so I'm very appreciative of you reaching out to me. I think you found us, our podcast, and then sent me an email, I believe, right?
Yeah, actually, somebody who listens, who reads my content, messaged me and said that he also listens to you guys and that I should reach out to you.
Well, it's awesome. I'm glad we made the connection however we did, and we definitely appreciate your time.
Absolutely. Thank you very much.
Thanks, Ana. Talk to you soon.
And that was Ana from Analytics Miami. Stephen, what were your thoughts about our conversation with Ana?
Well, I thought it was fascinating, but the conclusion at the end was that, and I'm glad she agrees with that, this Florida is going to keep doing what it's always done. It'll keep growing, mainly because of the incoming people, or as she calls it, we're in the early days of dissipation of the epicenters, which will attract wealth and capital to Florida.
Fascinating. She really knows her stuff. She studies the data, studies what the levers are behind the data. And it was really a great conversation, and appreciate the introduction that we received from one of our listeners to connect with her. And I think we're going to try to have her on a regular basis. We talked about this, to try to have her on at least once a year to give us some update on what's going on, give us some real granular looks at the South Florida market. Stephen, Ana was a great guest. Where can we find other great guests?
The place to go is www.investfloridashow.com. You can go to our archives and listen to all our past podcasts. Also, don't forget to download the app on your mobile device so you can listen while you're driving or you're in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odum and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.